Good morning, everyone, and welcome to the PivotBoss pre-market video for Tuesday, June 18th, 2019. I am Frank Ochoa, aka PivotBoss. Here's a look at the daily time frame of the ES. You'll notice right here that price is testing the previous week's high right now, trading just above it, and that's also the top of the narrow 6-day range here. If you look down here on a 5-day range basis, we are very compressed. I mentioned before that we are leading up to the Wednesday's FOMC statement and Fed interest rate decision. Today we do have building permits and housing starts about an hour before the market opens, and we also have API weekly crude oil stock later on this afternoon. Overall, not expecting a breakout here ahead of the FOMC on Wednesday, so we could see a push back into the range here to trade outside of 29.12 and continue higher would be outside of the norm, but it certainly can happen. As a matter of fact, if you take a look here, let's bring these PivotBoss pivots and bring them to a weekly. We usually have them on the monthly here. You can see right there that we are right at the previous week's high, and that is something to watch for you intraday traders. Keep an eye on that zone, because if there's any failure to hold, say 29.10s or 29.09s, right now we're trading a small box just above that previous week's high here. That could lead to a rotation back toward 2900 and perhaps even a little bit lower. Again, we're likely to stay somewhere in this range or continue to trade around that range. Not likely to see a full-on expansion and continuation phase, but the 2910 is going to tell us a whole lot. So keep an eye on that on an intraday basis, because if there's any failure to hold 2909, 2908, that could open up a rotation back down inside the range. Overall, we continue to look for a major expansive move out of this range. You can see again on a 5-day range basis, we are super compressed here, trading 45% of normal. And overall, we could be looking at expansion ahead that can take us about 120 points of range whenever we do see that expansion. So keep an eye on the top end of this range, as any failure up here could lead to a rotation back down on an intraday basis. If we take a look at the NQ is up as well, trading outside of its narrow range as well. This one right here breaking above the previous week's high as well. You can see right here, currently trading just above those highs. And again, keep an eye on, say, 76.15 or so, because if there's any failure to hold above 76.15, that could open up a rotation back down on an intraday basis. We are still seeing strength out of this market. We're still seeing a continuation higher, and we're also trading above 7600. The last time we came into 7600, we got 3 ticks beyond it and then rotated back down about 200 handles. So right now we are testing the 7630 zone right here. 7630 is the FOMC key level from September. That's the FOMC key level that came out and then we sold off in Q4. You can see how important that level has been, and we're testing it again now. So we're in a zone here where easily we could trade into this area and then fall right back into the range. To trade beyond this zone and stay above it would suggest perhaps we're coming back up into the top end of the range at around 7900. So again, this is going to be a very important level. We're trading precisely at it, 7630.75, and that goes all the way back to this FOMC key level right here in September. We traded just above it and then sold off all the way down to Q4 lows, came all the way back, formed a box, came down below it, held, and so we're right at it right now. So it's a very important level to keep an eye on both a swing basis but also on an intraday basis as well. Let's take a look here at crude oil. You'll notice with crude, it is getting progressively narrow within this range. The previous session almost closed the session with an inside day. Late in the session, it kind of broke down outside the previous session's range, but we had an inside day before that. We're trading narrow inside day today. We are at 30% of normal right now in terms of the day's range. So this tiny little bar right here is just 54 cents, and it's been averaging $1.82 on a 10-day basis. So if you look back 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, that right there, it's averaging $1.82 of range, and that's more of a compressed range here than normal. So again, even on a 5-day range basis, we are compressing here today if that were to stay the case. But even on a wider 10 or even 21-day range, basis, we are compressing, and this could lead to a major breakout at some point. Again, anytime price tests the 8-period average or price is above it, it sees a push back down. We are still in a downtrending phase. You can see the PIMA is still providing resistance. We have yet to hit the 49 CVPOC, and we still have support down below at around 42. So again, still flowing lower. 55s are a major CLVN, so if we cannot get above 55s, perhaps we see another round of weakness ahead. Right now, super compressed as we head into the rest of the session. If we take a look lastly at gold futures, this one has been quite bullish. Every time we've seen a major selling tail, we've seen a little rotation, a counter trend rotation, and then as soon as price gets into the 8-period average, it has blasted off higher. We mentioned that day on the pre-market report. Yesterday in the pre-market report again, we were seeing initial bounce right here outside the range, and I mentioned it again that we could see another push higher. We're now trading right at the midpoint of the rejection day here. We're back above 1350. And overall, again, we could continue to see this thing try to trend higher and test the prices into 1360 to 1375. So this thing has not stopped going up just yet. It continues to see an upward flow until proven otherwise. All right, that is it for now. We'll see how this develops heading into the rest of the session. Good luck, trade well, and I'll see you in the trading room. Take care.